Hi everyone, it's Alessio Rostani of leadingtrader.com. Hope you had a fantastic weekend. I want to begin first of all by looking at a very important piece of information from Jason Geppert. So what we're seeing here is that for the first time since 2012, the commercial hedgers, commercial hedgers are the big money, the smart money, they have reached a new record short position, on stocks. In other words, the smart money is betting heavily against the stock market, the Dow and the Nasdaq. Let me just zoom in a bit here so you guys can see this properly. Okay, so that's what we're looking at right there. Now, let me show you what this actually means, because the last time that the commercial hedgers, the smart money, were this net short, so let's see what happened there. The last time was back in November of 2012, all right, just before the elections. And as you can see, the markets right there then took a major correction. So we had actually an 8% correction, a decline in stock markets. All right. Now, what happened next was that the commercial hedgers then went almost net long here by the end of November or beginning of December. And you can see the market actually was a good long signal because the market then started a massive rally at that point. The last time before that, in fact, that the commercial hedgers made a record short position was just at the spring of 2012, which, as you can see, that resulted in also quite a big market correction at that point. So this is not looking good for stocks. I'll show you exactly what I'm looking at in a few moments on the stock markets and what you can do trading-wise. Okay, so the stock market, let's have a look at S&Ps. We'll have a look at the Dow in a few moments. So on stocks, markets on Friday managed to close below a key support level here, as you can see. So we managed to close just under that support level at 1632.75 here. And on the Dow, we also look at the Dow here. Also very much similar picture, if you can see. Yeah, on the Dow as well, we managed to close below that 15,143 level here. So here's how I'm looking to trade this. If you just connect these highs on the Dow, all right, essentially short any pullbacks to this level at 15,143 to this trend line here, which puts it just around about, let me just see, if I just do a, all right, so if we do a 50% retracement on this whole move, about 15,240, which is also just around this support here on under these lows. So on the Dow, I'm looking to short any pullbacks, any rallies from 15,143 to 15,240. All right, let's have a look at the S&P. So on the S&P, pretty much the same. So I'm just going to connect these highs. So on the S&P, really any rallies, any pullbacks to this resistance here, so back to 1632, or if we get a rally back to this resistance on the trend line here, about 1640, all right, are good shorting opportunities here, And on targets, I'm looking for a move to 1619 and then to 1600 is, of course, a psychological level, which is very close to the 50-period moving average here, as you can see. For more information about trading the markets, whether you're a beginner or advanced trader, visit my website, leadingtrader.com. Thank you.